NVIDIA is one of the most well-known brands in artificial intelligence, AI. The AI revolution is being driven by the semiconductor manufacturing giant, which powers everything from sophisticated generative models to enormous data centers. NVIDIA's industry-leading technology and unwavering innovation have made it a very profitable company, and investors are clamoring for more NVIDIA stock. The numbers are self-evident. The stock of NVIDIA has soared by an incredible 25,651% in the last 10 years, turning early investors into billionaires. With a market valuation of about $4.5 trillion and becoming the first public business to reach the $4 trillion barrier in July, the company now proudly claims the title of most valuable company in the world. Additionally, Wall Street is still placing bets on this dominant force. Cantor Fitzgerald analysts recently increased their price target for NVIDIA stock from $240 to $300, demonstrating their unwavering faith in the company's capacity to spearhead the multi-trillion-dollar rollout of AI infrastructure. Can NVIDIA's rally continue to gain traction and hit $300 before the year ends, given the only increasing demand for AI? Since its founding in 1993, NVIDIA has transformed from a pioneer in graphics cards to a world leader in accelerated computing. Modern computing was made possible by the company's revolutionary graphics processing units, GPUs, which revolutionized the gaming industry in 1999. These days, NVIDIA's technology drive developments in a number of industries, such as artificial intelligence, automotive, and healthcare. The California-based business has actually emerged as the spokesperson for the AI revolution, and its contributions to the sector consistently garner media attention. AI workloads rely heavily on its high-performance GPUs, which no one can outperform. As a result, NVIDIA chips are a necessary component of almost all AI data centers. Due to solid foundations and unwavering demand for its AI chips, NVIDIA continues to have a commanding lead in the rapidly expanding AI sector, while rivals are vying for market share. With the launch of OpenAI's ChatGPT 2 years ago, which sparked the AI boom, the company's metamorphosis really got underway. Since then, NVIDIA's earnings have skyrocketed and its sales has tripled, solidifying its status as one of the most impressive success stories in contemporary investing. NVIDIA's stock has risen 35% so far this year, easily above the 14.5% return of the S&P 500 index as a whole, SPX. On October 10th, shares hit a record high of $195.62, and they are currently trading around 7% below that high. Rarely are high-flying growth stocks inexpensive, and NVIDIA is a good example. The market has priced in its supremacy as the unchallenged monarch of AI chips. The company is now trading much above the industry medians, at a high 43.44 times forward earnings and 34.12 times sales. The financials of NVIDIA are still solid. When the semiconductor titan released its second quarter fiscal 2026 earnings report on August 27th, it once again exceeded market expectations. Revenue above Wall Street's $46.1 billion projection, rising 56% year-over-year, YOY to $46.7 billion. The surge in generative AI that started to change NVIDIA's performance in the middle of 2023 was the driving force behind 9 straight quarters of annual sales growth of more than 50%. The company's data center division, which is focused on GPUs and related devices that facilitate massive AI workloads, is still expanding. Compared to a year before, the division's revenue increased by 56% to $41.1 billion, or about 88% of overall revenue. With $4.3 billion in sales, up 49% year-over-year, NVIDIA's gaming division also performed well, but the AI-powered data center segment has since surpassed it. CEO Jensen Huang referred to Blackwell Data Center as the AI platform the world has been waiting for, as the company's sales increased 17% sequentially. He also said that Blackwell Ultra production is ramping at full speed due to exceptional demand. The company profited from a $180 million release of previously held H2O inventory, which was a portion of around $650 million in unconstrained H2O sales to a non-China customer, even though it did not record any H2O sales to China during the quarter. With GAAP and non-GAAP gross margins of 72.4% and 72.7% respectively, profitability is still high. Adjusted EPS well above projections of $1 per share, up 54% year-over-year to $1.05. In the first half of fiscal 2026, NVIDIA also distributed $24.3 billion to shareholders in dividends and share repurchases, with $14.7 billion remaining in its buyback authorization. Despite not anticipating any H2O shipments to China, NVIDIA is forecasting a good third quarter for fiscal 2026, with revenue of about $54 billion, plus or minus 2%. The business expects to maintain profitability with GAAP and non-GAAP gross margins of about 73.3% and 73.5% respectively. It is anticipated that non-GAAP margins would end the year firmly in the middle of the 70% range. How do analysts feel about the stock of NVIDIA? Cantor Fitzgerald maintained its top pick rating of overweight, but increased its price objective for NVIDIA stock from $240 to $300, following recent talks with CEO Jensen Huang and CFO Colette Kress. Analysts noted that NVIDIA's extreme co-design approach and full-stack products like CUDA-X are assisting in bringing the cost difference with ASICs down to an average of only 15%, which is a wise decision that benefits both NVIDIA and its clients. Cantor projects EPS of $8 in 2026, which is significantly more than the $6.26 consensus forecast, and $11 in 2027, which is higher than the $7.37 average. With platforms like OpenAI now yielding 50% to 70% gross margins, and GPUs selling out as clients race to acquire capacity, demand for AI compute is skyrocketing. A recent spike in token usage, fueled by multimodal inputs and time-based reasoning, was also noted by analysts. According to Cantor, the widespread and quick adoption of generative AI indicates that this expansion is genuine, long-lasting, and not at all a bubble. According to the investment firm, generative AI has replaced machine learning in a variety of areas over the past year, including social media, search, ad recommendations, and user-generated content. According to Cantor, the market for AI infrastructure will increase from $3 trillion to $4 trillion by 2030, with NVIDIA alone seeing $2 trillion in spending shift from traditional computation to generative AI. For the chip giant, that is a huge opportunity. Despite this, analysts continue to strongly support NVIDIA with a strong buy recommendation, demonstrating Wall Street's unwavering faith in the company. 40 out of the 40 analysts that cover the AI darling give it a strong buy, 2 give it a moderate buy, 4 recommend a hold, and only 1 analyst stands out with a strong sell rating. 22% possible upside from current market levels is indicated by the average analyst price objective of $222. NVIDIA stock may rise up to 77% from here, according to the street high price target of $320. NVIDIA officials recently met with analysts from Morgan Stanley, an investment firm. With a positive outlook, the analysts, led by Joseph Moore, departed the meeting. Moore stated in a note that the shift from CPU workloads to GPU workloads inside current application workloads has been the primary cause of NVIDIA's revenue increase thus far. Even though artificial intelligence, AI, has generated a lot of excitement around NVIDIA, the majority of the game-changing AI use cases are still to come. As more AI applications start to appear, the company will be at the forefront of the upcoming expansion. Moore has rated NVIDIA stock as overweight and set a price target of $200. Furthermore, the recent agreement between AMD and OpenAI, which might offer OpenAI a 10% share in AMD, doesn't appear to have worried NVIDIA's management too much. Moore thinks that while several rivals produce chips, none offer the flexibility and full-stack strategy of NVIDIA GPUs. In 2025, NVIDIA will still be at the forefront of computing and artificial intelligence developments. The company's market valuation recently reached an astounding $4 trillion, driven by the growing demand for its supercomputers and AI chips. With the successful expansion of its Blackwell AI supercomputer production, NVIDIA generated billions of dollars in sales in just the first quarter of 2025. With advancements like the GeForce RTX 50 series GPUs with strong AI capabilities, NVIDIA continues to dominate the market for AI chips. Additionally, the business has landed a huge $100 billion deal with OpenAI, highlighting its critical role in enabling the next wave of AI technologies and data centers. These calculated actions strengthen the company's position as a leader in the AI space and increase its impact on a global scale. At the moment, NVIDIA has a $444 trillion market valuation. In addition to being up 35% year-to-date YTD, NVIDIA's stock has increased 26% over the last 52 weeks, indicating strong momentum surrounding its operations. On October 10th, shares hit a 52-week high of $195.62, but they are now down 7% from that price. On October 10th, NVIDIA's shares fell 4.9% intraday despite reaching a high. At a premium valuation, NVIDIA's stock is now trading. Its pricing is significantly higher than the industry average at 43.44 times anticipated earnings. The Q2 results for NVIDIA exceeded expectations. NVIDIA's fiscal 2026 second quarter results, which concluded on July 27th, showed strong growth, the company announced on August 27. Revenue reached $46.7 billion, a 56% year-over-year YOY rise. This amount exceeded the $46.1 billion projected by Wall Street analysts. During the quarter, NVIDIA's data center generated $41.1 billion, a 56% increase over the same period last year. The business recently revealed that the NVIDIA RTX Pro 6000 Blackwell Server Edition GPU would be accessible on well-known servers that have previously been deployed by Taiwan Semiconductor, TSM, Disney, DIS, and others. Additionally, the business revealed that their Blackwell platform outperformed all other ML-perf training benchmarks in terms of performance at scale. NVIDIA's profit margins continue to grow steadily. Non-GAAP EPS was $1.05, up 54% year-over-year, while non-GAAP operating income climbed 51% year-over-year to $17 billion. Additionally, the adjusted EPS number above the $1 that Wall Street analysts had predicted. The business did not sell any H20 chips to its Chinese clients throughout the quarter. However, it benefited from roughly $650 million in unconstrained H20 sales to a non-China customer, as well as a $180 million release of previously reserved H20 inventories. NVIDIA's non-GAAP EPS would have been $1.04 if this benefit had not been included. NVIDIA anticipates $54 billion in revenue for the third quarter, give or take 2%. No H20 shipments have been anticipated by the company. Analysts on Wall Street are hopeful about NVIDIA's earnings in the future. For Q3 of fiscal 2026, they anticipate EPS to increase by 50% year-over-year to $1.17. EPS is expected to expand by 44% yearly to $4.22 in the current fiscal year and by 40% to $5.91 in the following fiscal year. How do analysts feel about the stock of NVIDIA? There are other Wall Street analysts that share Morgan Stanley's optimism over NVIDIA's future. Mizuho analysts recently increased their price objective from $205 to $225 while maintaining their outperform rating. Analysts predict that Mizuho will generate over $300 billion in revenue from AI data centers by 2028, which demonstrates the company's ongoing faith in its leadership position in AI. While keeping their overweight rating, Cantor Fitzgerald analysts also increased the price objective from $240 to $300. After NVIDIA CEO Jensen Huang described the company's AI infrastructure build-out, the prognosis was updated. Additionally, KeyBank analysts maintained their 250 price target and retained their overweight rating on shares. According to KeyBank's analysts, the growth of GB200-300 products and hyperscaler demand will benefit NVIDIA's stock in the future. With analysts giving it a consensus strong buy rating overall, NVIDIA has been in the news on Wall Street for a while. 40 of the 47 analysts who have rated the stock give it a strong buy rating, 2 give it a moderate buy, 4 give it a hold rating for safety, and 1 gives it a strong sell. A 23% increase from current levels is represented by the consensus price goal of $222. From here, there may be a 77% increase, according to the street high price prediction of $320. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
KG, all right, let's talk big picture here with these markets. The Dow hit another record. I know we're always so focused on the S&P 500. We did finish mixed yesterday. There are some who say we could be due for a pullback. What's your thought about the makeup of the price action?
I think when you're kind of looking at the level of resistance for the S&P 500, it does make sense that we did see a little bit of a pullback. That 5750-ish area is going to be key. And we have seen a little bit of a rotation when it came to the market, especially the risk-on frothy areas of the market. If you're looking at the uranium trade, the power trade for that matter, or even gold, silver also selling off fairly aggressively. And that actually could drag equities down a little bit, I would say. I think the earnings are still going to be paramount over the next couple of weeks in order to drive the S&P 500 to move higher here. But from a technical standpoint, it does kind of make a little bit of sense that we have some headwinds. Obviously, there's some uncertainty when it comes to the China-U.S. trade talks as well. Some of that intraday action does put a little bit of pressure on the markets just in general. And we did have earnings yesterday, and I would say that they were, for the most part, weren't that great when you're looking at the headline names and some of the commentary that they had around the overall economy or their specific industries. It really did kind of maybe put a little bit of a scare, especially when you're looking at the semiconductor space and the analog space in general when you're looking at devices.
Okay, but still overall, earnings, at least when we looked at them during the day yesterday, were pretty good across the board. But